Have you ever wondered how to start investing? Well, you're not alone. The world of investing can seem like a complex labyrinth, but it doesn't have to be. Investing is an essential tool for financial growth, allowing you to put your money to work and potentially multiply your wealth. This video will break down different types of investments and provide a step-by-step guide to kickstart your investing journey. So buckle up and get ready to transform your financial future. Stay tuned if you want to turn your financial dreams into reality. First, it's crucial to understand what investing actually means. Picture this. You've been given a small seed. Instead of consuming it right away, you decide to plant it. You water it, care for it, and over time it grows into a fruitful tree. That, in a nutshell, is what investing is all about. It's taking what you have now, putting it aside, and allowing it to grow over time. Now, why invest? Well, the purpose is to generate wealth over time. It's about more than just saving money. It's about growing it. Here's where the magic of compounding comes into play. Compounding is when your investments generate earnings, which are then reinvested to generate their own earnings. So the longer your money is invested, the more opportunity it has to grow. In essence, investing is making your money work for you. It's about planting that initial seed and reaping the benefits down the line. There are several avenues where you can place your money. Each carries its own set of characteristics, risks, and rewards. Let's dive into the world of investments. Picture a bustling marketplace. That's essentially what the stock market is, a digital marketplace for buying and selling company shares. When you buy a stock, you're buying a piece of that company, becoming a shareholder. Stocks have the potential for high returns, but they're also subject to market volatility, meaning the value can fluctuate wildly. Next, we have bonds. If stocks are like buying a piece of a company, bonds are like loaning money to that company or sometimes the government. In return for your loan, you receive interest payments over a set period, and at the end of that period, you get your initial investment back. Bonds are generally considered safer than stocks, but the potential returns are also lower. Then we have mutual funds, a kind of investment where you pool your money with other investors to buy a diverse mix of stocks, bonds, or other securities. Mutual funds are managed by professionals, making them a good option for beginners. They offer diversification, which can help to mitigate risk, but they also come with management fees. Let's switch gears and talk about real estate. When you invest in real estate, you're buying physical property, like a house or commercial building. This can offer steady cash flow in the form of rental income and potential appreciation in property value over time. However, real estate also involves ongoing costs like maintenance and property taxes, and it isn't as easily sold as stocks or bonds. Now, let's touch on some less traditional investment options. There's gold and other precious metals, which have historically been seen as a safe haven in turbulent economic times. There's also the ever-evolving world of cryptocurrency, which has the potential for huge returns, but also carries significant risk. Let's not forget about investing in yourself, either. This can take the form of education, learning a new skill, or starting a business. These investments can pay dividends in the form of higher earning potential and personal satisfaction. And finally, there are retirement accounts like 401k calls and IRAs. These are tax-advantaged investment accounts designed to help you save for retirement. They can hold a variety of investments, including stocks, bonds, and mutual funds. The magic of these accounts lies in their tax benefits and the power of compounding over time. So there you have it. Stocks, bonds, mutual funds, real estate, precious metals, cryptocurrency, investing in yourself, and retirement accounts. A veritable smorgasbord of investment options, but remember, no investment is risk-free. It's important to understand the potential rewards and the risks before you dive in. Each investment type has its own charm and challenges, aligning with different financial goals and risk appetites. So, take a moment to reflect on what's important to you, and then choose the investment path that aligns with your goals and comfort level with risk. Scene script. Once you understand the different types of investments, the next step is to actually start investing. So let's talk about that process. First and foremost, you need to set your financial goals. Ask yourself, why am I investing? Maybe you're saving for a house, planning for retirement, or aiming to fund your child's education. Knowing what your goals are will help you determine how much you need to invest and what kind of return you're looking for. Next, you have to understand your risk tolerance. This is a fancy term for how much financial risk you're comfortable with. If the thought of losing money keeps you awake at night, you might want to stick with safer investments like bonds or money market funds. But if you're okay with some level of risk, you can venture into stocks or real estate, which potentially offer higher returns. Now comes the research phase. You wouldn't buy a car without doing some homework, and the same goes for investments. Learn about the company or asset you're considering. Look at its past performance, its plans for the future, and the general health of the industry it's in. There's no such thing as too much information when it comes to investing. Let's move on to diversification. This is the practice of spreading your investments across different types of assets to reduce risk. Think of it this way. If you put all your eggs in one basket and that basket falls, you lose all your eggs. But if you put your eggs in different baskets, you're less likely to lose them all at once. So don't put all your money in one stock or one type of investment. Spread it around. Once you've invested, your job isn't over. You need to regularly review your portfolio. The market changes, and so might your financial goals. Maybe a stock you invested in isn't performing as well as you'd hoped, or perhaps it's exceeded your expectations. Either way, regular reviews will help you make necessary adjustments and keep you on track to reach your financial goals. And lastly, keep in mind that investing is not about getting rich quick. Patience, perseverance, and a level-headed approach are key. You might face some losses, but don't let that deter you. Remember, even the most successful investors have had their share of failures. It's all part of the process. Remember, the journey of investing is not a sprint, but a marathon. As a beginner, it's important to keep certain things in mind before you embark on your investment journey. One of the crucial tips to remember is the importance of starting early. The sooner you begin, the more time your money has to grow. Thanks to the magic of compound interest, even small investments can add up over time. Next, consistency is key. Investing regularly, no matter how small the amount, can create a substantial portfolio over time. Consider setting up automatic monthly contributions to make this process effortless. While it's easy to get swept up in the excitement of sudden market rallies or the fear of downturns, remember that investing is a long-term game. Market fluctuations are part and parcel of the investment journey. Don't let short-term volatility sway your long-term investment strategy. Stay the course and remember that patience is an investor's best friend. Lastly, don't shy away from seeking professional advice. Investing can be complex, and there's no harm in getting a helping hand. A financial advisor can provide valuable insights tailored to your personal financial situation and goals. Remember, everyone makes mistakes, and it's okay to learn as you go. The important thing is to start, stay consistent, remain patient, and always be open to learning and improving. Investing is a journey of learning, patience, and discipline. To recap, investing is an important step towards financial freedom. We've journeyed from understanding what investing is to exploring the various types of investments available. We've seen that there's a whole gamut, from stocks and bonds to real estate and mutual funds, each with its own risk and reward profile. We've also delved into the actual process of starting to invest. Remember, it may seem daunting at first, but with a clear plan, a well-defined goal, and a steady approach, you can navigate this path with confidence. On this journey, patience and discipline are your most trusted companions. The world of investing isn't won by quick sprints, but by steady marathons. And remember, continuous learning is pivotal to your success in this arena. Remember, the best time to start investing was yesterday. The next best time is now. So start your investment journey today and let your money work for you.